Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week. This is analysis for the November 21st, 2022, the week that is starting from Monday tomorrow. So what we basically do is we will look at what happened during the previous week, and what we can learn from that, and how we can analyze the market position as of now, and then plan for a better trade for the next day. Let's go to the charts. The weekly candle of the Nifty and the BankNifty on the right side. Nifty, you can see that it's a bull trap the bulls by moving up and then closing below it, the previous candle's high. So it's almost like a hammer. It indicates that the bulls presence are there, but actual hammer, if it is there on the top of a trend, it's a little troublesome. It could indicate a reversal. But as of now, it's a small pause is what you'll have to assume, given the fact that the BankNifty, look at this. It has got a green close, and it made a 2 times new all-time highs last week, right? So that's the kind of bullishness that you've seen. So previous week had shown a confirmed record on the weekly candles from both the Nifty and the BankNifty indices, but this week BankNifty continued to move on, but Nifty has taken a pause. Sector to sector pullback has happened. Daily charts, the Friday close is a hammer clear, and BankNifty also is a hammer. Nifty also hammer, right? So it's kind of a change in polarity. Support is possible because the previous resistance now acting as support on both indices, and then this could potentially indicate that there could be a bounce up from here to take out the new all-time high on the Nifty and another new all-time high on the BankNifty. That's a possibility seen in this change in polarity CIP. But hammer again on the top of it is trouble. Could indicate a trend reversal in the short term, and it's an external hammer, not exactly a hammer on the Nifty. Yeah, so some pullback has happened. A good retracement to the 18,200 nearby levels has happened. 250 kind of levels has happened, and then it pulled back. Same thing. So whenever there is a continuous move without any pullback is where trouble is there. When there is a pullback on a rally, it's okay. If you remember a few days back, last week also we had a similar pullback to the 18,000 below levels, and then market shot up with a gap up. So that's a trend. So market is not giving any conclusive clue this week. Previous week it was a double confirmation bang on Nifty and BankNifty of the breakout for the weekly resistance trend line, but this week it's not giving a clear cue on the Nifty. Moving on the BankNifty and the Nifty, the Bollinger Bands analysis, if you see, the bands are showing that there is a upward expansion on both, but Nifty is showing small contraction as it had shown 2 times previous week as well. This could be temporary pause and it could expand further, but overall the bias is bullish for sure on the both the bands. Price is supposed to move more as per what the both the bands are indicating. This is another weekly view on how the trend line breakout was confirmed last week. 2 weeks of confirmation has come in Nifty. Now that it has given a bull trap and then pull back slightly. Not too much. It's a flat close. If you see, it's a flat close on both the indices that happened today. Not on both indices. On the Nifty, it's a pure flat close. Look at the breakout that is confirmed previous week on the BankNifty, right? So let's summarize. It's a flat close on week to week basis. Just 43 points loss, 36 points loss on the BankNifty. That's all. And breakout is done. BankNifty is still at a new all-time high. Daily charts showing some dip and move up. Right, that also is a close flattish close basically there. So Bollinger Bands expansion we have seen. Now let's move ahead and see the resistance and support levels. Right, so we can see that you have the 18,458, 500 nearby zones as a good resistance, previous high, and then you have the all-time height at 18,605. Downside you have the 18,255, which was not respected, but it's a major support zone, given the fact that the market has bounced from that zone nearby. 18,255 could still be 255 could still be a good support. Below that you have 18,178 zones, and then the gap is the 18,100 zones, and then you go back to the 17,966 support zone. But most likely you could find a support near the gap, near the 18,100 levels, and then it could bounce back. The worst case. Otherwise, it could change in polarity at the same zone where it has taken support and then move up. Could be a small pullback to the 18,200 nearby levels, and then it can move up. On the Bank Nifty, similarly, the resistance is Fibonacci 38 extension levels, all-time high nearby levels 42,628 to the first resistance upside. Above that, you are rounding down with 43,000. Downside 41,840 would be support. Then you have the gaps over at 41,643, which could be the worst case scenario that can happen. It also matches the trend line channel, the trend line line that is coming from the bottom, right? So the worst case is that 41,600 nearby zones, 650, that zone Bank Nifty can move down. On the upside, it could make a big breakout now that it has consolidated 3 days exactly. So it's facing huge resistance at this 42,600 levels. You can clearly see that third day. Right? It could pull back a little more and then bounce up, or it could take this as a support from where it had earlier broken out, change its polarity bounds, and then it could move up. All possibilities are there, right? That's the support resistance is moving again. We are going to see the momentum and the trend analysis on the Nifty and the Bank Nifty. Look at this, it's a Nifty 50 weekly charts and Bank Nifty weekly charts that you're seeing on the right side. Left side Nifty, right side Bank Nifty. Momentum is rising clearly on the bullish ones above RSI 60. On the daily charts, Nifty, right side Bank Nifty. Daily charts are showing that momentum is bullish, and Bank Nifty also momentum is bullish about the RSI 60. There is a divergence that can be seen on the daily charts of Nifty alone. Divergence is positive reverse divergence, that is bullish in nature, unconfirmed. It could also further extend to this RSI support down at RSI 60 and then take a bounce also. That's also possible, right? But there is a possibility that the change in polarity bounce and this momentum divergence will work out and market move up in the short term. That's what it indicates, right? So momentum is bullish definitely, no doubt about that. On the Nifty and the Bank Nifty, both on the short term and the long term, right? And momentum is taking a small dip on the short term. That's all. The Nifty ADX indicator, trend indicator, is clearly bullish, right? And so all the time from posting. It's on the DMA positive zones on the Nifty and the Bank Nifty both, right? Medium term and the daily charts both showing bullishness, but there is a rising trend that is seen in the weekly charts. The medium term is bullish, but and with good strength on the trend. But short term, some pullback has happened. So strength is reduced, but the crossover has not happened. So that's it. Momentum and the trend both are bullish. Continue to be bullish, no doubt about that. Volatility indicator in India VIX is cool off, right? So that's a big thing. 14.39. That's it is a flat close week to week VIX that you see, but 14.4 is it's very good for the option traders. Then volatility is very less, and the choppiness is supposed to be non-harming in nature. And but you have to always remember that the mean reverting nature of the VIX could take this as a bottom, and then from here, since it has a close to close, flat from previous week and this week, it could take this as the bottom. From here, it can bounce up and spike up as also possible. So you have to be always cautious on that. But VIX cooling off is positive for the market, for the traders especially. Now the open interest strategy on the Nifty is showing long unwinding with bearish nature. It's a flat build-up with the short-term open interest rate on the futures that we're talking about. Bank Nifty also shows short volume. So overall bearishness is there in the futures high. But for the 24th monthly expiry next Thursday, that's coming week, the put call ratios are closer to bullish as you can say, but it's not at bullish. 1.73 Nifty and 0.87 Bank Nifty is just closer to bullishness. Some optional traders have turned to the bear side, is what you can understand. The options open interest rate of the Nifty and the Bank Nifty is charts of that for the next week. Monthly expiry is what you see there. It's very interesting, right? The highest put rating is seen as 18,300 and 18,400 is for the highest call rating is there. The second highest support is 18,000 and open interest. Second highest open interest rating is happening. Call rating is happening at the 19,000 level. So 18,000 seems to be a good support on the downside, and 18,400, 500 may be on the upside. So resistances. Bank Nifty 42,000 is a straddle, where the highest put and call is written there. So support and resistance 42,500 is going to be critical. Second highest put and call rating is in at 42,000 and 43,000. PCR ratio and the bearish short OI build up on Friday, we already seen that. So options OI It's not giving much of a clue, right? Except that resistance is what is projecting outside, but huge volatility is not expected by the market writers. 18,000 may be the last pullback that may happen. Supports may be found there. Similarly, 42,000 may be the worst case scenario that could fall down, is what the option writers think. That's the option side of the options. So futures are negative, not fully bullish on the options. So that's a mixed pack. Indecisiveness is there. The charts. Similar indecisiveness can be seen in the options data as well. Now, what happened in the sectors last week? Different sectors. That's really interesting. That all the sectors have moved down basically. Right? It's indecisiveness or a flat or moved down. So auto sector moved down 2%, pharma moved 1.2%, 2% again down from CG. Rest is all flat closes. IT sectors close flat. Decisive with the doji on the weekly. Metal is indecisive, doji on the weekly. Reality is indecisive, flat close, indecisive on weekly. Right. So the momentum is bullish, you can say, only in the metal sector till. So long positions may be attempted in the metal sector. Some government policy news are also coming in favor of the metal sector. So metals may rally next trading week is what we can understand. But otherwise, it is an indecisive down week. Bearish week is what across sectors performance. So, all the momentums. IT sector is also bullish in the short term, but we'll have to wait for the medium term also. Just still in the sideways. Right? So otherwise, bullishness is not seen anywhere other than the IT and the metal. So all sectors are struggling the sideways on the medium term and the short term, right? And right, so that's a mixed bag. Bearish, thing that you are seeing in the sectoral analysis. That is sector, you can see that it is given a good bounce from the support zone. One was climbing, still not at the end of the zones, and metal, you can see that it is facing resistance, but it is in the bull zones on both weekly and daily. Auto sector is last 3 weeks moving down. It looks like a double top, and then there is negative divergence also there, and seems to be working out. And so now the momentum on the weekly has turned into bullish on the sideways zones from the bullish zones. Right? Just slipped in the sideways. So right, so auto has gone sideways. Pharma has gone sideways. It has successfully broken out from the trendline channel. Met with the resistance upside. Last 2 weeks it's down. Now it seems to be, you don't know whether the trendline parallel channel may give a support, but the momentum also has resisted below 60 and then gone down. So it may probably fall back into these support zones inside the channel again. So again, sideways pharma. FMCG is still bullish. There is some bullish divergence is there, but it is unconfirmed. It could spike up from here, take a support and spike up into here. But there is a double top that is created on the FMCG also. Remember, a cup pattern breakout, which is what is happening. So this double top is seen in the FMCG and the auto both. So that M pattern could take it to the neckline of that, and then you'll have to see whether it is tracking down from there or not. The IT sector is sideways, medium term momentum sideways, and indecisive move is what you see there in the reality sector axis. So that's what sectors, the industrial sectors are telling to us. Index heavyweights, the Nifty 50 index heavyweights, HDFC is also at a resistance, right? Although the weekly momentum and the daily momentum was broken out, the bullish ones are over NSI 60. Trend, everything is bullish, but it has closed last week with a doji indecisiveness, right? HDFC also is broken out and formed a very small body doji kind of candle above the resistance, and up above we have more resistance on the way before it can take out, and before we can say there is a breakout that is happening in HDFC, right? So as of now it's bullish, continue to be bullish, but last week the market has taken a pause. The stock has taken a pause and it's indecisive, and it is in the bull zones also, and it doesn't know what to do. That's what it is, right? Lens. The channel top pulled back a little bit, met with the resistance is seen in the momentum, resisting just below 60 and then falling down. So it is on top of the channel, so there is every chance that it can again fall back to the neckline of the cup pattern from where it had. It has multiple times been attempted to move up. So Reliance again sideways, falling momentum. IT stocks, that's the stock that is doing good. Nifty and the TCS. Both of them have broken out from the parallel channel last week itself. This week is a confirmation of that, and now we have a gap resistance, very big gap resistance in the case of Nifty, and a major resistance in the case of TCS also. So momentum is still not climbed into the bull zones on the Nifty and on the Nifty and TCS on the medium term. Short term it has already climbed in. So the question is whether it will be able to take out the channel and then move further up or not. We'll have to see in the coming weeks. So ICICI Bank, it's maintaining the bullish momentum in the medium term, and it is a breakout. It has given a pullback, again moved up, met with the double top resistance, double top M pattern, could pull it further down to then climb once again, and if that bridges from there, it's going to be resistance. So as of now, it's bullish in the medium term, right? It's a good pattern. So we'll have to keep a close watch with this neckline or the previous pullback line at the 840 is going to get breached or not. If that happens, we're in trouble. Otherwise, I see it looks good. Looks good. Kodak Bank is zigzagging since multiple years now, and it is trying to take out that resistance, and we have resistance more on the upside of the 2030, 60, that kind of levels. And we'll have to see whether this momentum is able to climb into the bull zone or not. As of now, it is just on the edge of resistance at RSI 60. If it is able to climb above that and then move further up, then we may see a move. Right? But otherwise, at resistance is what is Kodak Bank, and at momentum support is what ICICI Bank. At resistance is what Infosys and TCS is. At resistance is what Reliance is. Indecisive is what HDFC is. That's a summary of the index heavyweights. Institutional participation, if you see, it was institutions that are both the FIs and the DIs both are buying last week, net to net in the cash market. 349 crores of buying happened by FIs. 2,275 crores of buying again happened in the DIs also. Derivatives also, FI, DI, so more flat last week. Look at this. So that's kind of positive. On the previous week was has seen some selling. Some good buying by the FIs, so they have reduced the pace of buying, but they're still not in the selling mode. And number, if you see, it is was selling when the FIs were buying, have now turned into buying and trying to balance the market, right? That's what I'm seeing. So institutions are very positive bullish as per the data that is shown here. Moving on, global markets, gold, USDINR, crude oil, and all this. So let's see the gold and let's see the currency market. Dollar index has moved up slightly, 0.5% less than that, and then this is after a correction. There is almost 7.3% of correction has happened from the all-time high, 20-year, multi-decade high, and all that. So now it is 106.96, close to 107. Still not that great. But the thing is, momentum has slipped to the sideways, and then once again it has moved up this week. After having slipped to the sideways, it has managed to climb up back in the support zones. Right, thereby there is a confirmation of a positive reverse divergence is bullish in nature, and then this could probably go back to all-time high again. Is what the charts can predict. Right, a bullishness crossover is about to happen. That it also did not materialize on the ADX on the medium term as well. So. Index still a worry, but previous week's correction also gives a good feeling, although most of that is taken away by this week's green. USDINR currency pair, we see it's moved 1.5% up, right? It was close to below 81, now it is 81.61. Once again, it had gained up momentum and it is trying to move up. But it's in the sideways momentum on medium term. Rupee is still 81.61 is quite a weak rupee that we continue to see. So nothing much has happened there. Although the dollar index has cooled off a little bit, which is positive, but last week was still not enough, right? Last week was not great for the currency in a nutshell. US market was flat. All the indices were most flat, 0.1% move. S&P 500 1% down. Right, and 1% down again on the Nasdaq. So Nasdaq and S&P 500 behave slightly different from the Dow Jones. Dow Jones is completely flat. A doji, indecisive. This is what you see there. Right, look at these charts. Right, a doji at a resistance after a breakout from a trend line channel. Right, indecisiveness. Right, it's almost there, but the momentum is yet to climb back. It could face a resistance here and then fall down. It's at resistance purely on the medium term. But look at this. It is not even on the top of the channel, not even face resistance before that itself. The Nasdaq is showing indecisiveness whether to even go to the top of the channel. So at resistance, clear, much weaker than the Dow Jones. S&P 500 again at resistance, exactly at the top of the trendline channel, and ready to move down further. And indecisiveness after a big up move that had happened following the inflation positive news that happened. So look at that big candle that was the last week on all the indices and the US markets. It is giving very positive views, and that's why our market also moved. Now that all the US mother market is at resistance, the question is next week how is it going to take? Is it going to break out, or is it going to give in and surrender and come back? That's going to happen. Definitely, we cannot have a breakout. We just cannot have a breakout and make a new all-time high when all the US markets are crashing down. That's not possible. So keep a close watch on that. Crude oil that's a good news. The good news last week was about US dollar. The good news this week is about crude oil. Last week the good news of the US markets have made a big mega move. This week the good news is crude oil has cooled off. Right, sideways momentum. Clearly you can see that. How much is that? Down move was it's like 9% was down crude oil last week. It's an 18 nearby levels, which is very good. Gold is struggling to take out this resistance after it had fallen down and then bounced up. Big move happened last week on the gold. Now at a resistance now. The question is whether it is able to take out this resistance or not. Yep. As of now, sideways momentum on the medium term is what you see on the gold. Right. So mixed back. Gold at resistance struggling, sideways momentum. Crude sideways 9% down, good down move. It has come back to the 80 levels, far away from the 90 100 that we were thinking it would go. Still in the parallel channel, the probability of doing that, but as of now momentum has cooled off into the sideways zone with 80 as the current price. US markets flattish but at resistance. Dollar didn't do much, had given good pullback, but indecisive bounce up after the pullback of 1.5 to 7.3% in the dollar index and USDINR. So that's what you see. So mixed bag, but there is overall you can see global cues from the currency, crude oil, and US market for performance. It gives an indecisive at resistance feeling. Right. Let's move on and see what stock picks are there for the next week. So, RT Industries is a bearish call short because the momentum in the medium term has fallen to the bearish zones. Big red bearish candle, major supports are reached, and good down move till the parallel channel bottom is a good restorer. It's a trend line channel actually. It's nicely moving up, down, up, down. Now there is every scope that can touch this. That's a short swing trade on the RT Industries. And State Bank of India for the upper pattern breakout, pullback came and then again bounced up. And there is every chance it can go up to the channel top for sure. It may take weeks or it may take days. You never know that, but momentum is bullish. With the neckline as the stop loss, if you play, then you should give position as well as swing off trade opportunities in this particular stock. State Bank of India long. RT Industries. It's a chemical stock, I believe. I'm not sure, but it's clear short call. Short trade opportunities can come in there. Right? Two stock picks. Now the third one. This is the payoff for Nifty options. Bear put calendar spread is what you see here, where we are selling 18,800 put for the December 1st week, right? That is the far month we are buying, and the near month we are buying 18,600 put, right? So that's a very good probability of profit, and break evens, is very good, 18,682. Only if that breaches, then we have trouble. Then there's no trouble. So we have, see, basically it's a calendar spread. Right? So this coming weekly or this monthly expiry, the next month, next weekly expiry, next expiry, so we are selling, right? That strike, and then we are selling a higher strike of the next expiry, right? So there is no loss on the left side. On the downside, we are protected completely, right? There is very little loss that can happen, right? And on the upside, if the market is breaking out or moving up, whichever way it goes, as long as it doesn't go above the 18,682, so it's a spread, it's a calendar spread, basically, right? It's by selling the put, by using the put, right? Selling and buying both, right? So very minimal probability of loss, 92% probability. RiskReward is reasonable as long as you don't keep it to the last day, except before Wednesday. And very good range that you're getting, right? And one side is completely protected. What else you need, right? That's a Nifty option strategy. Bear spread. Now that we have seen different parameters and also study on various things, let's just summarize and have a view. The view for me for the next week on the market performance is a mild bullish view, in spite of all this pullbacks, whatever bad things that people start talking about whenever there is a red candle after breakout. So the fact is that it is confirmed a breakout last week. Now, if it turns out to be a fake breakout, no problems. We would have a stop losses, and then we will stop it and market will give another option to enter. But the charts are still saying that the momentum and the trend is bullish. If I continue to buy, they're not selling. Wix is cooled off below 15. What else you need for after trading? Price patterns, all of this gives me that view. But and remember, BankNifty had made 2 days, two new all-time highs were made last week, despite a cross-sector sell-off that has happened, pullback or undecisive, as whatever we call it, is there in the charts. Right? So that adds up. So US market. So the only thing that we have to cautious that US market has done a good rally. It is at the top of a trend line channel and at resistance, all the indices. If it is not able to break out of that, then we may end up to where we were previous to 2 weeks before. If that is the case and that happens violently, then it's going to stop us from breaking out and making new all-time high, because we are at a point at Nifty where we are about to make the new all-time high. That may not happen now. So market may consolidate, take some more pullback, consolidate, but it may not crash because it has shown its resiliency. If it had to crash, it would have crashed long back when US markets were in deep trouble than ours. So public views are not still great. The RBI report, reduce inflation, war, China, all this concern is still there. But it is all cooled off is what the sentiment indicator VIX is showing, that the sentiments are not that choppy, are not that really bad. But remember, any time the VIX could mean revert from this level. Volatility behaves like that. It is a flat close last week for the VIX week to week basis. So we could take this as support and then bounce it from here. So that probability is also there. So keep a close watch on whether the VIX is going to rise above the 20 or not. If it is above 20, stay out of the market until it cools off back and it falls below the 20. But right now, we can confidently take trades. Right at this VIX level, as long as it doesn't spike above 20, we can confidently take the trades. But VIX is also indicated that the sentiments in the market is cooled off a bit, which is towards the bullish. Right? So US markets, you have to keep a close watch. If big moves happen there, then obviously we'll struggle to break out. That's all. So levels to watch, 18,000 seems to be very good support on the downside of the Nifty, and 40,500 also support on the Nifty. And the upside, 18,600 would be all-time high breaking from Nifty side again, and 43,000 would be a good rounding number to keep a watch on the BankNifty. So if this happens, on the upside breakout. If the other thing happens, 18,000 cracks down, then markets may fall further down. Is what we are to assume. We cannot predict how the markets will behave. We can only look at the probabilities and the levels and supports and resistances. That's all in our hands, and then position size properly. Manage the risk. That's all we can do. We cannot predict markets. We can only talk about probabilities, right? So always hedge your strategies if you're playing in options, right? If you're carrying forward, definitely hedge your position so that you know how much maximum you will lose and you will still be in the game. Portion size accordingly so that you're still in the game, right? Otherwise, if you're investing, market is crashing down, make use of the cash secured puts and forward calls and all these different strategies, videos of which are there in the playlist if you're not seeing that. Right? There are various option strategy videos available. So as of now, it's just to summarize, the market is not giving big clues. It's indecisive. It has taken a pause, and that pause is at a top of a rally, and it's immediately after a breakout. And that is exactly how uh, the US market is also indecisive. So it does not give much of a clue, but charts are saying it's still bullish from the momentum trend and VIX and institutional buying and all this point of view. Market is still bullish, so we are taking a mild bullish view for the next week. So that's maybe if this view and this analysis, this technical analysis of different parameters has helped you in some way to make a trade plan for the next day and then understand the market better in some way. If it has helped you, please subscribe. If you're not subscribed, pass it on to your friends and colleagues and whoever you may want to learn from this, so that it helps us also. We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.